In this episode, we will discuss how human psychology can drive bull runs in markets. Hi, my name is Rocco, aka Bitcoin's best friend. We have been discussing over the last few episodes how we are in the midst of a very pivotal series of events that will fundamentally alter the future of Bitcoin adoption by not only regular, what are called retail investors, but also by large institutional investors and eventually nation states. And once this snowball starts downhill, it will grow and pick up speed because of a psychological phenomenon known as FOMO. FOMO stands for an investor's fear of missing out. Bitcoin has and will continue to have the potential for parabolic price increases. Price movement on charts is shown in what are known as candles. A dramatically rapid upward movement in a short time span would be referred to as a God candle. Bitcoin has and will continue to have the potential for a God candle breakout because it is unlike anything else in history. Bitcoin has absolute digital scarcity. Not too long ago, I spoke with someone who actually referred to Bitcoin as just a tulip bubble. Now, if you don't know what that is, there was a market event back in the 1600s in Holland, triggered by the FOMO of the times, which saw the price of tulip bulbs rise insanely quickly and almost just as quickly fall back to below where it started from. Calling Bitcoin a tulip bubble was a common derogation used by fiat propagandists for several years in Bitcoin's early history. I hadn't actually heard anybody use this comparison in years because it is very easy to disclaim by the basic logic of supply and demand. Tulip bulbs are not hard to grow and have no limit on their potential supply. This is a vivid example of low stock-to-flow ratio. Remember, like we talked about in the episode titled, How Hard is Bitcoin?, to which I'll leave a link below, when something has a low stock-to-flow ratio, it is a very weak store of value. On the other hand, Bitcoin is unbelievably difficult to mine, and it has an absolute and immutable limit on its supply. It has a high stock-to-flow ratio, and this means it is a very good store of value. Also, the tulip bubble lasted a matter of weeks, whereas Bitcoin has a strengthening history of tick-tock next block for 15 years and counting. End of story. But my point is this: FOMO can drive both types of polarly opposite commodities. Fear and greed have always been driving forces of human action and reaction. Bitcoin adds a component of absolute scarcity into the equation that has never existed before. This scarcity is still very much misunderstood and underestimated. And this is why it will be very interesting for Bitcoiners like us to sit back and watch the hysteria of the coming Bitcoin bull run. Of course, I'll continue to dollar cost average as I have been. The Bitcoin market, the bear market, was a gift, an opportunity to acquire the hardest money ever known at prices that people will probably never see again. The FOMO that will hit retail and institutional investors of Bitcoin will be fun to watch and to document. And I hope you can follow me on this quest. Please like, subscribe, hit the notification bell, and comment if you please. And always remember that just like a talking dog, Bitcoin is a miracle.